Hello, everyone. Today is Wednesday, April 29th. My name is Alan Dick, and on behalf of my fellow Commerce Next co-founders, Scott Silverman and Veronica Sonsev, I want to welcome you to today's webinar. This week, our topic is advertising to cash-constrained consumers. This is the sixth webinar in our series concerning the impact of COVID-19 on digital retail. Before we continue, I'd like to welcome our panelists. David Cost, he's the VP of Digital and E-commerce at Rainbow Apparel Company. Chris Costello is the Director of Marketing Intelligence and Research at Kenshoo, and Allison Khurana, the CMO of the Grommet. All three will be talking with us today, but first, let's take a look at the agenda. We're going to start off with some housekeeping notes, let you know where everything is on here on the webinar. I've got some BizRate insights that I would like to go over with you guys. Kenshoo is going to take over, talk to us about some retail and marketing examples and some data they've got. We've got some polling to do, kind of get your pulse, and then we've got some panel discussion and audience Q&A. Now, when it comes to the audience Q&A, you don't have to, we'd like to make certain that you guys know that you can ask your questions at any time, and we'll get into that in just a second. Don't worry about missing anything. We're going to be recording this webinar, and we'll make it available for replay. That'll probably happen by tomorrow afternoon. And when you want to ask your questions, just take a look at where that big arrow is taking you at the top of your screen. You can ask your questions at the bottom. We'll be moderating them and asking our panelists as we go along. If you see a question that you like, please make certain to upvote it. That tells us that's of particular interest, and we'll make certain to try to get to those. We have handouts available. All the slides are available both on the live webinar as well as the recording. You can find them in the handout section. And if you're watching this as a recording, the lower document icon at the bottom of your screen will show you where to download those, as well as any poll results. Okay, so BizRate and Commerce Next are partnering to provide you with insights into relevant consumer purchasing habits. Today, we have 4 important data points for you to consider. Number 1, consumers are making fewer impulse purchases. Now, BizRate asked about, I think, 1,200 people, how has your personal financial situation changed, if at all, over the past 12 months? 41% of the people asked in April said they make fewer impulse purchases, and that's up 17% from the month prior. You can also see there's other data points on there. People are buying more online than they've done before. That was a 19% increase, and many more are buying in bulk. Next question was, how has your personal financial situation changed, if at all, over the past 12 months? We see that 35% of consumers have a worse financial situation in April over March, and that's a 4% change from April over March. So a third of our consumers definitely are in worse situations. Next up, 34% of consumers believe that their finances will get worse in the next 12 months. Now that's interesting. It's actually improved over March, but it's still a third of the people. So we definitely see people fearing for their income. Interestingly, 2/3, 67% of consumers believe that the national economy will be worse in the next 12 months. Major numbers there. There's not a lot of consumer optimism over what the economy is going to look like. Just wanted to give you some of those insights from BizRate. I'm going to turn it over to Chris Costello. He's going to be going into some more data from Kenshoo. Chris, take it away.
All right. Thanks everybody for joining us on this call. Once again, my name is Chris Costello, the Senior Director of Marketing Research here at Kenshoo. Here are just a few ways you can track me down, and the obligatory sheltering in place, going out and running with a face mask picture here. I'm a runner now. I wasn't before. That's crazy. So a little bit about the data we're going to be talking about. We kind of draw performance data across about $6 billion in annual advertiser spending across 3 primary advertising channels. And those are kind of color coded on the graphic on the right. You've got your traditional paid search, and this is keyword and shopping ads on Google, Microsoft, and others. Paid social, which for our purposes here mostly means Facebook and Instagram. There's a smattering of Pinterest in there. And what we're calling e-commerce channel advertising. So these are sponsored product listings on e-commerce shopping sites like Amazon and Walmart. This is obviously one of those areas that's been really growing over the last 2 to 3 years. And so there's some interesting stuff that we can talk about there as well. Kenshoo's footprint is primarily North America, and shopping and retail and CPG are some of our stronger segments from a category perspective. So we'll drill into that as we look through the data. And kind of to set the table for how we're talking about that, we are really looking at advertiser spending as a proxy for consumer behavior. And that works differently depending on which of these channels that we're in. So if you look at that e-commerce channel advertising, that's a fairly distilled view of what categories are important to advertisers because they've purchased the ads for these products in these categories, and then the consumers who have clicked on those ads. So spending on this channel is a pretty good way to get a sense as to what's happening and what's up and what's down. Paid search is a little bit different. There are certainly elements of it that are more bottom of the funnel direct response, but then you can supplement that. You can look at things like impressions that are showing, somewhat of how many searches are happening for some of these products and categories and these particular brands. And that may show in some cases a difference between what people are searching on and what people are clicking on, for example. And then as a whole, paid social is more about what advertisers think is important to shoppers. You see, for example, if the CPM for a social ad goes up, a lot of that is because the advertiser decides they want to pay more for those eyeballs. So that is part of the equation. And then spending also helps us get some sense of what's going on. So with that in mind, what have we seen over let's say the 4-week period that ended the week of April 12th here? We're looking now at the e-commerce channel, and most notably, this is where we saw this big spike in the middle of March. When you think about that week that began on the 8th, the middle of that week was when the NBA canceled their season, when Tom Hanks and his wife were infected with the coronavirus, and which is really the watershed moment we're talking about here. And then there was a lot of talk about the beginning of these stay-at-home orders and sheltering in place. So we see a lot of spending in this area on e-commerce. And if you drill down, one of the areas that we saw was household products. And for, orienting this towards those cash-strapped consumers, one of the things that you see is the cost per click of these ads tends to be lower. So you'd actually see a dip in that metric when you're looking at this. But that's because within the e-commerce environment, your margins tend to be pretty constant. So, you're only going to bid up your ad price so much if you're selling toilet paper. Since then, it's kind of slowed down a bit. It's ebbed a little bit away, and we'll see how that's kind of then shifted back over to some of the other channels. Paid search, we're going to look at both impressions and spending. We're seeing that, there's a period of transition in those 2 weeks. I'll tell you why we're focusing on those in a minute once we've gotten through all the results. But you see impressions since then have really taken off across shopping and CPG. Spending has recovered to the point where it's back above where it was when a lot of this started within this shopping and CPG subcategory. And, some of that is it's a matter of, look, we know people are still shopping. We know people still need things. People are still looking for things. So, the paid search channel provides that window into just how much people are looking for items. Some of those things may have shifted in terms of what they're looking for. But in aggregate, we're seeing spending across these categories kind of recovering to where it was when we started. And then paid social. Paid social is a bit of a different beast here because there are so many other pieces of the equation. And so in addition to impressions and spending, I also added the CPM pricing because one of the things that I'm sure if you've been watching the space and you've been reading articles, there's been a lot of talk about CPM deflation right as we got into this crisis. And you see that from the second to third week of March. And a lot of that is just, we've also heard about increased social media usage. And so what you see here is this flood of impressions. And if there are twice as many impressions as there were last week, the value of an individual impression to any one advertiser is going to decline. So we think that's a big part of what happened here. We also know that some advertisers may have paused their programs quickly, so there may have been less competition. But then the other things to note here are that CPMs have started coming back in this segment. You can see that spending in that the last 2 weeks on this chart have started to come back. Impressions are still a little bit on the downstroke, but these are all encouraging signs that shopping online is back, and it's starting to drive somewhat of a recovery across what we saw in late March and early April. So when you think about those 2 weeks that we circled in each of those charts, you can kind of think of it in terms of the traditional purchase funnel. And when you look at how the activity shifted, you saw a lot of spending in that e-commerce channel with growth. So that's way, way down at the bottom of the funnel. That pulled somewhat from search, kind of maybe a bit more mid-funnel. It's got some lower funnel and some upper funnel properties. And then social, which was further still. So this kind of underscores how we see the interplay between these channels and just the value of having lower funnel advertising active. So, when you meet these cash constrained consumers, you have the pieces in place to be able to meet those needs when you've got that high level of purchase intent. I've seen, some of this period referred to as, Black Friday / Cyber Monday in April because of these really high levels of intent. But now we're starting to see changes. So the value of that upper funnel strategy is starting to return, and you'll start to move those levers accordingly, but you also have those lower funnel ads to make sure that you can close that loop. To that end, what do those lower funnel ads look like? On social, we're talking about dynamic product ads, or dynamic ads for products is the official name. And you see here the green line on these charts and how it diverges from all other types. You see, certainly for spending, you see, it's actually up compared to the beginning of March, and impressions, same thing. You see this definite difference in how these ad types are behaving. And then moving on to our next slide, we look at this for search, and we're talking about shopping campaigns and kind of the same overall trends where you see starting that, second, third week of March, you see this strong divergence from product ads and text ads. And a lot of that comes from, there may be broad-based advertisers that have things that people need. I think that a couple of the obvious categories that jump out here that we haven't broken out to look at specifically are things like sewing supplies and craft supplies and things for to support the mask making movement is definitely an area that we've seen the numbers start to grow. But you see this difference between the lower funnel and the mid or upper funnel in both of these cases. One other area that I'd like to touch on that's a little bit different, going back to our e-commerce channel, this is something that Alan and I had talked about in the run up here, is that within the e-commerce channel, another phenomenon that we're seeing is that the percentage of purchases that are new to brand has been increasing. You see for the first couple of weeks of Q2, like double what it was in Q4 as a percent of total. And so obviously, as people are turning to online shopping, perhaps for categories of things they haven't shopped for before, or perhaps their first choice is not there anymore, we're seeing them turn to others, and that's netting out to more new to brand sales than we've seen in the past. So what does all this mean for the cash-strapped consumers? Well, I mean, obviously shopping for deals has been a part of online shopping forever. And we see this as we start to drill down into what categories are seeing that better relative performance. So, what are they looking for? What are they clicking on? In aggregate, the segments that we see standing out can give us some more insight into those needs of the cash-strapped consumer. So in this next section, we're going to look at how we are trying to quantify those changes over time. And we're doing it three ways. If you look at, for example, this is 8 weeks of shopping and apparel within paid search. And first and foremost, we want to look at the short term. How did things do last week versus the previous week? Then we kind of extend that window and say, how did last week do against the average of the last 4 weeks for more of a medium term? And then long term, how did the last 4 weeks do the 4 weeks before that? So you can kind of get a sense of the momentum and the velocity of some of these different segments. And then we look at that by channel, and we get the results on the next couple of slides. Here we see e-commerce. It's kind of, I'm calling it, because The Last Dance is on and we're watching all the stuff about the Bulls. These are rebounding stats. I'm a big Dennis Rodman fan. So this is the e-commerce channel now for the week that ended the 18th. And you see for spending, you see things like beauty within CPG popping out short term, but then the asterisks show medium term and long term as well. You see apparel, you see household products and CPG overall as a category, but then we also expanded the view to include impression growth. Because again, that just shows that with sponsored product listings that people are, spending time in that category. They're searching for things in that category. They may be clicking on related products to that category, and those all trigger impressions. You see, again, some of the same ones, but some other things pop out: housewares and home furnishings, computer and electronics, et cetera, and so on. Moving over to search, we'll do the same thing. We'll look at spending, we'll look at impressions. The overall shopping and retail, that's exclusive of CPG, is up, but then CPG is also up as well. We're starting to see a bit of a theme here. We're seeing that computers and electronics pop. We're seeing housewares and home furnishings pop. We're seeing apparel. A lot of the anecdotal evidence about spending with the stimulus checks. We're talking about computers and electronics gear and apparel as well. So we think that's some of the phenomenon we're seeing here. And then impressions, again, for search gives us a bit of a sense, but most of the same categories that we saw here. And then for social, once again, we see apparel, we see computers, we see housewares. Anecdotally, I can tell you about housewares. I'm spending a lot more time with my coffee maker, and I'm really understanding where it might fall short and how I might want to get a new one. So I think that's a big part of the type of thought process that's going on there. So even if you're cash strapped, certain things are coming through as being very valuable during this time period. And so you see, and here we're looking again at CPM as our secondary metric, as a way to see kind of what advertisers think the eyeballs that they're valuing more highly as we go across these categories. So just kind of to bring this all back together, how can we effectively reach those cash-strapped consumers, focusing on those lower funnel ad types across digital channels is something you want to do to make sure that shoppers can see your products when they need them. They have higher levels of purchase intent. You might not need to fill the funnel as much as you would during, a normal period of time, at least for highly essential or relevant items. And one other thing that you saw in those last couple of slides is consider short-term, medium-term, long-term changes in your KPIs to look at signs of a rebound. Just looking at month over month is not going to be enough right now. You really need to kind of be watching data as granularly as you can to really pick up those changes. And you also might need to think beyond things like, well, I just need to look at spend, or I just need to look at conversion rates. There are other secondary metrics that you might want to consider beyond some of the ones that you normally look at. And then, the message of hope to close us out here is that we may be out of the woods in terms of ad spending declines. All the channels that we're monitoring were either flat or increasing week over week as of the week ending on the 18th of April. And that's what I've got prepared for you. I'm going to turn it back over to Alan now, and he's going to bring on some of our other panelists and show some poll questions for you now.
That's right. We are heading to the polls, folks. All right. So let's talk about polls. So what we're going to do is we're going to be asking you guys a series of 4 questions. I'd definitely love to hear your thoughts on some of these things. At the end of the polling, I'm going to close it, and then you can see the results in the closed section. If you are watching this as part of a recording, you can just use the icon at the bottom of the recording screen, and you will see a PDF of all the polling questions. So with that in mind, let's begin the first poll. First question. Which of the following categories are you expecting to increase spend in May compared to April? And you can check all that apply. Now, we're going to ask the decrease question secondly, but right now the question is, which of the following categories are you expecting to increase spend in May compared to April? And you can check all that apply. Give it a minute here. some good results coming in. Paid search ads, definitely. Paid social ads. I'm watching a horse race and the live results come in. 25 responses so far, very good. We're going to keep it open here for just a little bit. I want to make certain you guys have time to actually answer this question. 31 responses in. Definitely paid search ads. Digital audio, not doing too well. E-commerce channel advertising. All right, I think I'm going to close that poll. Definitely looks like paid search ads and paid social ads are going to be the ones that do the best. All right. Okay, next question. Which of the following categories are you expecting to decrease spend in May compared to April? Same categories, and you can check all that apply. This is the reverse of the first question. This is the decreased spend in May compared to April. By the way, we're seeing a lot of really good Q&A questions coming in. So when you're done with the poll question, glance on over the Q&A and upvote the ones you think are good or add your own, because we're definitely seeing some good questions coming in. All right, let's see where the decreases are coming. Digital audio. They're pretty much mirroring what we saw before. 21 responses in so far. All right. I'm going to give it a few more seconds here to let everyone get a chance. All right. Looks like digital audio and e-commerce channel advertising, like Amazon and Walmart taking the hit here. All right, we're going to move right along. Next question. How prepared is digital to support store reopenings and the consumer questions and new behavior that this will create? So how's digital preparing for the opening? Very unprepared, somewhat unprepared, so on. You guys can see it. Let's take a look. How prepared is digital to support store reopenings, and customer questions, and new behavior that this will create? Looks like it's leaning towards the unprepared side. Now, hold on here now. We got 30 responses in so far. Looks like somewhat prepared is where the answer is, although there is about 26% of you saying that you're somewhat to very unprepared, but the majority is definitely in the somewhat or very prepared category. All right, very interesting, with 17% saying it's not applicable. All right, brilliant. We're going to close that one out. See, one or two more coming in. All right. All right, closing that. And our final question. How valuable to your business is Google Shopping ads now being free? Now, this was announced by Google on April 21st. Not valuable at all, a little value, some value, a lot, or it's exceptionally valuable. So it looks like the majority of this is kind of skewing towards some to a lot of value, with roughly 60+% of the respondents saying some, a lot, or exceptionally valuable, and roughly 1/3 saying it's of little to no value at all. All right, brilliant. And just to give you a sense, if you're not certain about it, if you want to learn more information about it, here's the link and some data on that. That'll be in the handouts that you guys can take a look at later on when this is over. All right, time to bring on the panel. I want to welcome Dave and Allison back, and we'll start grilling them. So Dave, Allison, we've just reviewed a lot of data here. Let's get initial reactions. Dave, what are your thoughts here? What are the first thoughts after looking at all this data?
I mean, the comments around Black Friday in April, rang true for us. With our consumer, when extra cash shows up, it tends to be reflected in purchases. And when kind of for us, when the stimulus checks hit, the business took a dramatic rise. So that's kind of been we had the initial event, when the NBA and all the sports teams started canceling their seasons, business tanked. Things kind of just crawled along, and then when stimulus checks hit, the business took off.
All right, Allison, what are your initial thoughts here?
I see a lot of the same, I think, consumer behavioral shifts that David's speaking about in terms of timing with which the business really picked up. I think the very interesting angle for us has been not only the shift we've seen in terms of consumer behavior, so more purchases, higher intent, some different categories of purchasing, some different price points. What we've also seen is a real shift, Chris, to your point, around our marketing landscape, CPMs, pricing, competition. We have, that's really kind of backed off for us. So we've been in a much more favorable position in terms of oftentimes being one of the only advertisers of, let's say, in Google Shopping of a given product, whereas we typically might have a lot of competition there. A lot of that competition has gone away, whether it is retailers who are out of stock in the product or retailers who are dramatically pulling back their ad dollars. That for us has been a pretty unexpected shift.
Very interesting. You mentioned, so we had a polling question about Google Shopping now being free, and we had a conversation about that just before we started the webinar. Allison, do you want to pick back up on that since you just mentioned it? Do you have any of the details? Do you know any of the any initial thoughts on that as well? Because that seemed very interesting.
Yeah, so we've been looking at that quite a bit. As it relates to our business, we do a meaningful portion of our ad spend through Google Shopping on a specific product basis. And, essentially just kind of big picture, that the impact it's going to have is that shopping search is going to start behaving a lot more like text search. So text search, you have the paid listings and then you have the organic listings. Shopping's now going to be a lot more like that. Now, of course, Google's not completely transparent around exactly how, paid listings are going to be differentiated from organic listings, and they probably never will be. I can see already that they're kind of testing a range of different things in the UX, but what we know for sure is that the main listing tab won't be impacted. So the shopping products on the primary search tab are still going to be only paid listings, but within the shopping tab, it appears that there's going to be an opportunity for some organic listings to show up. Now, of course, Google's not completely clear about how many, how you'll be eligible, but from my perspective, what it looks like, and I think many others have said this as well, is Google. This is really Google's play to compete with Amazon and get access to the full product feed, even for retailers who are currently not advertising with Google. So the real win for Google is now they have 100% product feeds, or they will have 100% accurate and complete product inventory pricing feeds for all retailers, even those who aren't buying ads. And we're anticipating, we're already a pretty significant Google Shopping ad buyer. So, for us, there are two big shifts that this will lead to. One is we're going to be able to show up in search for some of our longer tail products. So, if you go to our site, we have a $800 custom-made beekeeping house. We don't often buy Google Shopping listings for that product because it doesn't pay off for us, right? That's such a kind of long tail product that we're not going to be investing up front there. But if for whatever reason a consumer is searching on relevant keywords within shopping, that's an opportunity for us to now show up on an organic basis. So that's the positive. The negative for us, as well as I think for many retailers who are already advertising on a paid basis through Google Shopping, is there's going to be a lot more competition. It does seem that once retailers get their quote unquote free feed set up with Google, there's a much smaller barrier to entry to just start buying a couple of ads. And we're anticipating competition to really increase and intensify in this way.
That's very good. Dave, Chris, anything to add to that?
Google Shopping doesn't really work for us. In the apparel space, I think because it's so competitive, the bids are too high, and because we can't fine tune the audience enough, the reach is too broad. Our spend continues to shift to social, and we find much higher returns with paid social than we do with product listing ads or paid search.
I would also add that Allison's point about this being perhaps a response or a reaction to Amazon is definitely valid. I would also bring up the European Union judgment, which had to do with Google Shopping specifically, and offering a free option would probably keep them in the good graces of governmental bodies who might look at the fact that it was completely pay to play before as being monopolistic. And so I think this also relaxes that tension.
All right, very good. I want to get to some of the Q&A questions because there's a bunch of them coming in, and I want to make certain we get to them all. Akhilesh Srivastava asks that he would like to hear or discuss more on the new to brand observation or statistic. Chris, let's talk about that a bit more, because I thought that was a very interesting discussion as well.
Sure. And, on the face of it, it is just that if a brand has not seen a particular customer before, then they count as new to brand. And we did see that uptick. I have it obviously quarterly in the slides that we showed. I may be able to get it at a more granular level, but that would happen. That would be more of a follow-up item. I would actually ask Allison and David if they've experienced this, if they're getting new customers that may not have come to them before because folks need stuff and they may not get it from place A. They may have a second choice for where they go to that thing if they're kind of seeing this phenomenon as well.
All right, Dave, do you want to take a crack at that? Anything interesting there?
Yeah. So for us, because we don't have a lot of visibility, so if we simply look at all the orders in a month and what email addresses have we seen before versus ones that we have not, there has been an uptick in new. What we can't determine is, are those brick and mortar customers that are buying online for the first time, or are they true new to brand? So even as we've, cut back on some ad spending and cut back on our new customer acquisition, as we're trying to gear up to handle the demand that we're having from existing customers, the new portion has still stayed unusually strong. But again, we can't really tell if that's truly new to the brand or if that's just new to online.
All right, brilliant. Akhilesh was also asking, what are marketers doing to address delivery uncertainties in buyers' minds at the top of the funnel? Another interesting question.
I mean, we're putting messaging right at the top of the homepage. We're running postings on social. We're sending email. We're trying to insert notifications into the order confirmation page. The longer fulfillment times are definitely an issue. It is spiking calls to customer service. And even though I think people have expectations that things are going to take a little longer because they are from people like Amazon, it is a real issue, and we're trying to find every place we can to try to give them a heads up to try to calm down the reaction before it gets too far along.
All right. Chris, Allison, any thoughts?
Sure. I do think this is where some of those other traditional branding channels can work in your favor, where, you might not be doing the same kinds of branding messaging that you're doing before, but, the ability to pivot relatively quickly within digital allows you to kind of change that messaging to be able to communicate that more quickly and more effectively to your customers. So transparency, I think, is the biggest thing right now, to make sure that you're realistically setting levels with your customers so they don't get disappointed. And similar to what David was saying, it's kind of using all the arrows in your quiver that you can do that to get that message across, because you're maybe not stimulating demand the way that you were before in some of those branding channels, but you can use it for other purposes.
All right. So let's move on here to some of the other questions we're seeing coming in. Alexa Gerber, they're asking, what are the retailers' greatest challenges right now? And that's one of the questions I was going to come to a little bit later on, but I think it's a good one to ask right now. Allison, what's your thought on that?
What's interesting, and I'll be so curious to get David's point of view on this as well, is that I actually think our challenge might be pretty close to the inverse of what many others might be experiencing. So for us, we're seeing really strong low funnel performance. And the shift that we're aiming to make right now is, how do we make sure that we're not just kind of enjoying this time of really low cost to acquire consumers, low cost per click, high ROAS, that we're not just kind of enjoying it and patting ourselves on the back, but saying, how do we make sure we're using this time to set ourselves up to be more effective in the future? So how are we not just acquiring the purchase, but acquiring the consumer? And for us, this has a lot of implications. This is around the types of ads we're running, the types of channels we're using, how we quickly follow a conversion with other marketing channels. So our focus has almost been to back off of low funnel, not to completely abandon it, but candidly, we had been quite low funnel in the past, and it's been to back off of that a bit, not kind of double down there, and instead use this as an opportunity to do a bit more upper funnel, acquiring new consumers who understand what we're about and who we really draw into our brand before they convert, because we're having the opportunity to do that right now at a lower cost than we've had in the past. And so we sort of want to use this opportunity to store up for the winter, might be an analogy for it, to basically prepare ourselves for when, at some point we'll go back to something close to business as usual, perhaps. And I want to make sure that we're using this time to set ourselves up to be even more successful there.
Mm-hmm. Dave?
Our biggest problem is fulfillment. I mean, I never thought, as a marketer, I'd have to deal with how do we slow the business down. But, the amount of demand that came out of this crisis and how it shifted, I mean, fulfillment is a very manual process. And if your demand doubles, you can't instantly double your fulfillment infrastructure. And it's the similar problems that you read in the press about Amazon and Walmart. So trying to staff up, trying to build a second shift, trying to build up that fulfillment capacity to handle what we now see happening online is truly our biggest challenge. And as we look at kind of the business over the longer term, there's been a steady transition of brick and mortar to online. This event has really sped that up. So where we thought we'd be a couple years from now, we're now all of a sudden there. And so we are rapidly trying to build up the capacity to handle a much larger online business than we would have expected kind of at this point in our growth.
All right. Chris, any thoughts from your end of it?
I think those kind of run a lot of the interest. I mean, I kind of agree with Allison a lot because I sort of made that argument earlier about the upper funnel doesn't go just because you don't need the upper funnel right now doesn't mean it doesn't go away. And, whether that's repurposing your messaging or, making sure you keep it in mind when things come back online are going to be critical for marketers to be successful going forward. Individually, it's both a blessing and a curse to have aggregated data because I don't necessarily see specific challenges to specific researchers or retailers as I do see the whole thing kind of moving en masse. So I'll just agree with Allison and Dave.
All right. Very good. All right, Alexa, thank you so much for that question. Noah Reimers, he's asking a question. How do you think discounting affects long-term relationships with customers? And Noah, I'll prepare you right now. We were talking about discounting on in the time just before this call went live, and we decided to cut a question about discounting. But I think you're asking it in a way that the speakers might feel that they can speak to in more generalistic terms. So I will turn it over to Dave, Allison, and Chris. Any thoughts from the panel on how discounting affects long-term relationships and customers, even if you talk about it in general?
I mean, look, I think in general, when you discount, customers start to have an expectation that you'll continue, and once they kind of get addicted to that drug, they want more and more of it. Again, in the apparel space, we see this a lot. People started with 10, 20% discounts. They went to 30, 40. I mean, there are some retailers that every other day they're 40% off site-wide. So, the more you discount, the more people expect it, and the more they will hold back and wait or not purchase until they see that discount come back.
I agree with David, and we have done some research around this at the Grommet, and something that we've found, which is not at all surprising, and I think is completely consistent, David, with your view, is that the consumers we acquire on discount or during discount time periods, particularly holiday, tend to have a lower 12 to 18 month lifetime value, a lower future frequency than our baseline consumer. And I think this makes perfect sense, in line with everything David said. And so one of our big strategic shifts that's been underway since the beginning of this year has been to shift away from site-wide. So almost never, and then we have not to date done site-wide promos. What we're doing instead are more targeted offers. I think actually David also uses ListTrack, which is our CRM, and we're using the ListTrack functionality to basically target our promotions only to the consumers who are highest propensity to respond to a promo, also high propensity to churn, and on the higher lifetime value scale. So we're really trying to target our promotional offering to the consumers, one, who need that, and two, who are high lifetime value, so it'll really pay off. And in addition, we're only serving a consumer one promo a quarter. So basically one promo day a quarter, to avoid that sort of being constantly seeing new promotions. We also limit our promotions to 15% off. And so those are some of the shifts that we've made to avoid these big spikes of promos and setting consumer expectations, but rather making promos a bit unpredictable and really measuring the impact on our business. And ultimately our goal is to really phase them out even further.
Yeah, in a previous webinar that we've done, one of our panelists was talking about discounting, and they really didn't get into that before COVID, but now found themselves in a position where it would be useful to move some inventory. And I thought it was interesting that they posed this as our gift to you, or our way to help you. And it was a way to offer the discount while managing the expectation that this was temporary and only for the duration of the pandemic. So I thought that was an interesting way to deal with that question.
Yeah, I think the game changes when you're talking about clearance, because that's going to become increasingly important as we come out of this. Is just the the impact on the supply chain and how you clear that discounts could be a tool there. But as long as you keep it localized, and as both Allison and David were saying, like manage those expectations that, you don't get this all the time, but, doing it in a softer tone.
Mm-hmm. That's great. Ari, thank you so much for that question. In a related note, Stephanie Sierra is asking, what else besides discounts can retailers do to entice consumers back when the economy does begin to reopen? And that's a nice segue because it's going to introduce another question. But yeah, what else can we be doing besides discounting? Dave?
I mean, it's an interesting question, right? I mean, I don't know. I mean, look, to me, this comes down to just kind of the basics of what it takes to run retail. When we work very hard to get somebody to come see us the first time. And once they come see us for the first time, we try really hard to get an email or a mobile number to be able to talk to them again or get them to follow us on social. And then once we have that, it's up to us to keep producing compelling content to keep brand top of mind. And I think those kinds of fundamentals stay whether it was before the crisis, during the crisis, or after the crisis. It's all those same things that we do. And I think, during this lockdown, I think we've discovered how, not that we didn't already know it, but how important customer loyalty is, because we're really living and dying based on, our ability to retain those customers that have bought from us before. And I think all of that kind of communication that we do to keep them engaged is what makes that possible. So I'm not sure that answers the question, but that's what we're going to do.
Mm-hmm. Allison, I invite you to give your thoughts on that.
I think it's also around engaging consumers on what they want to talk about, what they want to hear about, what they want to learn about. I think that's something that this crisis has really sort of thrown us into the pool on before we thought we were ready to swim. Historically, we had a pretty rigid launch calendar, planned out very far in advance, very organized, very orderly, but it was really based on our merchandising cycles rather than what would be top of mind for a consumer. Now, there were certainly some broad themes like gardening in the spring and grilling in May, June, but it wasn't flexible enough to allow us to, I think, really be lifting up the things and the ideas and the products that would be most interesting to consumers on a day-to-day, week-to-week basis. And what the crisis has taught us is it sort of built that muscle of, okay, we have to throw the plans out the window and come up with new plans and figure out what are people responding to, what are they not, change things out at the last minute. And that's a muscle that is going to, I think, serve us really well and serve all teams really well in the future. That ability to say, okay, maybe we planned this, but you know what, something's doing better now. How can we adapt and shift and be a bit more nimble and responsive to what our consumers are telling us they want with their actions?
Yeah, piggybacking off of that, I think agile marketing was catchphrase a while ago, but it comes down to that agility. It comes down to, within advertising world, we've been focusing on, this is really making you go back to basics of, right time, right place, right message. And that extends to the whole retail experience, listening to your customers, all those things that are kind of foundational and fundamental that we just kind of take for granted. I think we have to go back and go over with a fine tooth comb to make sure that we're doing them right. And I think that's how hard work is the answer to most questions on some level, but it's not necessarily going to be easy. But there are things that we may have started to gloss over because we're just kind of running on autopilot, and the autopilot is off right now.
Yeah, things definitely have been shaken, to say the least. And on that, so we were talking, Chris, you'd mentioned in your talk that retailers should be looking at KPIs differently. and I'd like to float that out to the panel. Are you guys looking at the same fundamental KPIs or new ones coming in? Yeah, I mean, that's really the question. Are you looking at the same KPIs, or are other ones kind of bubbling up and working their way into your consciousness now? So, Dave, Allison, any thoughts on that?
I mean, we're looking at the same, we look at our dashboard hasn't changed. How we interpret the results, I think, has. In a period where, again, now this is for us because of fulfillment issues, but in a period where we're advertising far less and relying far more on existing customers, things like conversion rates all of a sudden, skyrocket higher. So, it's all the same data. We look at it all year over year, like we always have. When we get numbers that seem to be, pretty wildly different from the patterns that we've seen in the past, we're attempting to interpret it, with the lens of what we're dealing with today. But I don't know. For us, the things that we look at are the things we've always looked at.
Mm-hmm. Allison?
I agree with Dave, and I think the biggest challenge now is exactly what he called out, that the same metrics matter, but the baseline has moved on a lot of these, and it's very hard to know exactly what's the baseline and what's effort. We are looking more and more at lifetime value and existing customer behavior, and that's a place where we've seen great increases. We've actually seen much higher than typical retention and existing customer repurchase, and that's a place we've actually been focused in our strategic initiatives for the year pretty explicitly. So a question for us is, okay, how much of this is the last 4 months of strategic effort and intent, and how much of this is also halo from the current situation? And that's something that, fortunately, I don't think we're going to fully know the answer to for a couple more months. But I think that's something that certainly keeps me up at night, is untangling how much of what we're seeing is underlying and how much is this new baseline.
Yeah, there's Chris. Any other thoughts on that?
No, I'll defer to my panelists on that one as well.
All right.
I mean, I already kind of set the I'm a numbers guy, so more numbers are good. and for me, I think I typically look at things at a quarterly cadence, so that clearly doesn't work right now. So I'm forced to look at things a little more granularly and try to widen the playing field. But looking at the same things differently, I think that counts to my argument. I'll take credit for that.
Excellent. So let's look forward a little bit here. What do you guys think is going to be the permanent change, and what's temporary? And I guess I'll phrase that as not only in the digital space, but Dave, I thought you had some really interesting commentary about the stores and what that's going to look like. So I'll throw this to David and Allison. What's permanent out of this pandemic and what's temporary? Allison, I'll start off with you.
What I think is temporary is the types of products and categories that consumers are purchasing, right? Like we're seeing baking products, crafting products skyrocketing. I don't think that there's necessarily like a permanent shift to making banana bread all the time. I do think, and I don't think there's that much question about that. My personal household has been trying to find flour for weeks, so that especially rings true for me. But what I do think is a bit more permanent as it relates to our business. So at the Grommet, we feature all products from small businesses, small manufacturers, and what I've been super excited about in this, if you can be excited, I guess, about anything in this really tough situation, is that consumers are very interested in knowing the kind of provenance of the products that they are buying and the individuals behind them. The stories behind the producers and creators, we're always A/B testing marketing that features that story in different ways. And it's always been our belief that that's important, but candidly, our marketing tests weren't always showing that consumers felt that story was important. And recently we've been seeing quite significant shifts there in terms of consumer interest in the maker behind the product. That, I think, is not a temporary shift. That, I think, is a trend that's been happening for quite a while, but that I think the current crisis and I think the economic impact of it has accelerated.
Mm-hmm. Mm-hmm. Dave?
Me again, I think I said a little bit before. I think the shift from, as we look kind of every year at what percentage of retail happens online versus brick and mortar, I think the online percentage has been advanced forward, several years, and I think that will remain. I mean, it's very hard to change people's behavior, but sometimes when they get forced to try something new, they discover they like it. And once they've had that experience, you kind of can't put that genie back in the bottle. So the first time you try to get a cab and there's no cab, and you try Uber and Uber's there, within minutes, and you can tell where they are, very hard to go back into a cab after that. So and again, it's kind of shocking to me how many people out there really have not had any or very little e-commerce exposure. And this event has clearly forced it. And now they're seeing, how easy it can be to look at pictures on their phone and have goods show up at their house, days later. And I think that's going to have a permanent effect.
Mm-hmm. Chris, any thoughts on that, or are you still the
Yeah,
guy?
I think kind of piggybacking off of what David said, it's not just shopping online, but the buy online, pick up in store. I mean, that was something that was definitely developing already, but it was kind of, slow but steady. I think this will give a faster adoption rate to that style of shopping. Also in the future, we will all only wear sweatpants.
Mm-hmm.
If Allison's got jokes, I got to bring jokes too.
I hope so.
All right. Well, we're just about ready to wrap it up here. I want to get to one more question from the audience. Have you also looked at differentiation based on price points of goods?
I have not yet. That gets a little tricky because we do more by baskets. I like the way I have visibility is more on basket size. There is some price point level stuff that we could do, but we haven't published anything or looked at it yet.
Mm-hmm. Dave or Allison, any thinking?
Yeah, I'll say we're seeing generally our price points our average order value is usually between 65 and 75, which I think is, and that's typically, 1 to 2 products in an order. And where we see the biggest changes actually in that number are around marketing channels. We have not seen a significant impact just over time, which honestly I've been quite surprised about. I thought the current context would be drawing down average order value or price points, but what we found is it's actually more dependent on marketing channel. Our email consumers, our print catalog consumers tend to have much larger basket sizes, which I think makes sense. You're being exposed to a wider range of products in those platforms, whereas, speaking of Google Shopping, like shopping, search, DPA, consumers tend to come in kind of one and done. And that's where we tend to have a lower average order value.
Mm-hmm.
In terms of products, really, we're actually seeing some significant increase in what I would even consider impulse, but kind of lower price point impulse purchasers or lower price point for our business. So for us, that's kind of the sub $50 mark. It does seem as though consumers are, I think, finding some joy in purchasing things for themselves in their homes that are at that more approachable price point level. Something that's doing really well for us is a hummingbird swing that's just sub 50. And, I think that's the type of product that is really resonating with consumers right now, that kind of something that brings you joy and doesn't break the bank.
Dave, a final thought on this?
Our price points are all pretty narrowly grouped, so it doesn't really apply to us.
All right, very well. All right, well, folks, that's going to pretty much wrap it up for us. Just want to make sure that you guys are all aware that we've got a digital resource center where we're keeping a lot of good benchmarking data. All of our previous webinars are available there, as well as some blog posts that you guys can take a look at. Some very nice data sitting there. Also, there's lots of ways that you guys can be helping. The restaurant industry has certainly taken a hit. We have the Restaurant Workers Community Foundation Relief Fund, and we're also supporting the open source COVID-19 medical supplies. And that's going to wrap it up for us. I want to thank our speakers, David Kost from Rainbow Apparel Company, Chris Costello, our data guy from Kenshoo, and Allison Khurana, the CMO of the Grommet. Thanks to Kenshoo also for sponsoring today's webinar. It was a really good working experience with you. And finally, thanks to you, our audience, for taking the time to join us today. We appreciate your interest and support, and we'll see you next week. Thank you so much, everyone.